Get my dollar trade playbook to learn how to position, profit, and protect during a dollar devaluation. Scan this QR code or click on the link in the description. All right, so last time that we were talking on Wednesday, Hans, if you remember, was like, I'm lightening up. He's got that trader's feel from doing this a few decades. And I had literally just posted on Tuesday morning, do not wait to hedge. 5 words in my teacher's voice. But it was very, very, very specific for short duration traders. So I was not talking about the trend reversal. I was not talking about the swing time frame that can last several more weeks to months, because my growth rotation is still in play. So this was very much a shake and bake warning, and we got it. And in fact, I talked about that Wednesday after the Powell pushback from FOMC. We were doing this live. And I said, don't be surprised if non-farm payrolls comes in weak, whether by design or by default, to give Trump more ammunition to scold Powell to cut rates. And sure enough, wow, did they come in with major revisions, so much so that the director of BLS was fired on the spot. Now, I wrote a big post about this. In fact, I posted this yesterday for LaDucTrading clients, but I also made it available on Substack, and that's a mini-me product. It is nowhere near the full trading desk of LaDucTrading, where we have 10 contributors, and we're talking tons of education, analysis, trades, trading room, courses, everything. No. This is just my mini-me project. But if you want to see that, SamanthaLaDuc.com, you'll get full view, because I wanted to make that available to kind of talk about that BLS data, because I believe it is actually showing us good signs of recession risk getting pulled forward. So now that makes it more imperative to see how Trump is going to do kind of an end run, if you will, as it relates to dominance over the Fed. Everything as it relates to Fed monetary policy right now is under fiscal dominance. We've talked about that from a macro standpoint, but I wanted to just kind of put that out there and give you an opportunity to look at my employment view in all of its full glory. And basically, that's my focus of yesterday, was to write about how employment trends right now are moving lower. And we hadn't really had any solid data. We'd had some soft data. We had, of course, ISM, manufacturing and services, come in contraction territory for output, also contraction for employment with very strong prices. We've seen that type of trend within segments of the economy. But for the actual recorded job hit, this is not an estimate. This is actual in the field numbers as it relates to job growth or contraction. The BLS did a major revision, and that shows we have weakness underneath the surface. So that's what I wanted to just point you to if you're interested. And then, Hans, what are you looking at? Because that's basically my purview right now, is employment, which is falling, prices, which are rising, CPI next week, productivity tomorrow, economic data, macro, always as it relates to dollar yields and oil. But right now, those are still staccato, meaning they're not really big headwinds. We got our sharp shake and bake, and then we kind of relax. We're in that pause area, which I warned about July 31st and August 15th. So now we kind of go pause until the August 15th, when I think we'll get some more volatility. What do you see? And share with us what you got.
I think, again, it's another example. And that was kind of the big question, was we got the sell off. We got that sort of ridiculous. We showed the sharp of the put selling and how unnatural that was. And it played out sooner rather than later, and as it should have. And the big question was going to be, well, does this finally have some legs to the downside? Can we see a little bit of a durable few days down, which I thought we could. We had a good chance, because sometimes those, as you know, Samantha, parabolas don't just end and then get reinvigorated after a day. They kind of take a little bit of time for that air to come out of the balloon a little bit, and it didn't. And I think that's quite a positive for the market, in terms of, I have maintained that I think there's going to be a little bit of a pause, maybe for a summer break. Everyone goes off to the Hamptons and the beach and things like that. And then eventually we have a further melt up. Maybe that just gets compressed again. I'm not sure at this point, but I remember saying earlier in the week, I said, if we get a couple of strong days after that big, fairly reasonable sell-off, what we finally got out of the market, I think that's a very big positive again. And I think people are just kind of going back to what looks to me more and more. I mean, I've been talking about the AI thing, but it looks to be more and more unknown kind of future for the market. And what I mean by that is, there was all this concern about spending on AI and all this CapEx and everything. And we saw from the hyperscalers that it's not so much a cost, it's looking like it could be a profit engine. So I think that's how the market may look at this, as, well, you're spending another 50 or 60 billion or 100 billion, but it's turning into actual money for Microsoft, actual money for Meta and friends. So I think there's this idea idea that it's not so much a negative, it may actually be a positive in a world where if you're not involved in AI, and I think this is going to filter down into the rest of the economy, if you're not involved, you may be facing a new reality of having existential risk at some point if you're just not involved and not getting on this train. So I think it's going to be, if you're spending money on AI, it's actually quite a positive, and people are going to want to hear that. They're going to say that you have a plan. You are going to spend some money on AI, whatever that means. And that, of course, is going to just play into the hands of the NVIDIAs and, of course, the hyperscalers and the cloud providers. I mean, they hammered Amazon, which I was like, okay, fine. So they didn't do as well as Azure, but I mean, that's not what they're about. That's not what the Amazon cloud layer is about. They're about basically the foundation of what happens in the world. So they're in a fantastic place. So I think it's interesting. Beyond that, I've been playing the sort of valuation vertigo, as we called it, the valuation vertigo, which is Palantir being the absolute poster child for valuation really not mattering as much anymore when the story is strong. So I think what we're seeing emerge here, and it makes sense because this AI inference phase is much bigger than anybody can imagine. And so I think we're starting to see some evidence of companies starting to really do a new thing. I mean, Palantir has been around for a while, but I think what they're doing is they're reinventing, they're almost creating a new category and leading it in terms of what they do for companies, in terms of coming in and making sense of data and making sense of inference and making sense of things in the way that we're talking about that companies are going to want to be a part of. And so it's outlandishly expensive. I think they have a run rate of $4 billion for this year. The company is worth Salesforce and ServiceNow together. It's worth the market cap of those companies together. And those companies have like 20 times the revenue. So there's absolutely no question that it is ahead of, it's over its skis a little bit, but this is what's happening out there. So I talked about this melt up, this Looney Tunes market, because I've seen it before. I saw it in 98, 99, 2000, etc. It can get stupid and squirrely and nuts. And we are going to see that, I think, come the fall. We're going to continue to see those things because there's just this amazing excitement about the new version of the printing press and running water and electricity. And here we go. We have to build it out. So I think it's going to be incredible. I think the PMI, I think manufacturing is actually going to probably have some chance to recover at some point because of this amazing infrastructure build out. Not that everybody's involved in those kinds of jobs, but I think there's going to be this sort of full blown kind of infrastructure boom. So I know I'm kind of going on and on, but beyond all this, I think the market is looking at a heck of a lot of positives and they're overpowering the negatives at this point. I know that wasn't a very good jobs number, and I am concerned about jobs, but it is focusing on those productivity gains and the build out, and there's a shortage of all this stuff. So I think there are things to be positive about. We just don't know how that's going to play out.
Join Samantha and Hans at the next Macro to Micro Options Power Hour, held each Wednesday at 4 p.m. Eastern Time. Registration is free. Scan this QR code or click on the link in the description. Watch the full Options Macro to Micro Power Hour episode by clicking on the video here and subscribe to LaDucTrading YouTube channel for more content.